Hi, everyone. Today, let's talk about artificial intelligence. Then we'll talk about First Republic and the bidding that's happening for that bank. Then we'll talk about the Fed pivot and what the markets are betting on. Then we'll get into all the economic data, so talking about Fed futures, economic calendar, we have FOMC next week, and then we'll touch on earnings. Then we'll get into the charts. Then we'll look at my results for the week and my thoughts going into the rest of the week. Don't forget to check out the Patreon and the Twitter. I post here every morning before market open, and for now, it's still all free. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So let's talk about AI. Everyone continues to say that AI is the next big driver for markets, and it's definitely been driving the market up. Microsoft and Google mentioned it a bunch of times during their earnings calls, but how does it actually drive revenue? They mentioned some of the uses for AI already in things like facial recognition, search, as well as credit card fraud. And they also talk about some of the things that we've talked about on this channel, how this recent rally has been driven by very narrow stock leadership. It's really just those top stocks, and specifically the ones that are involved in AI that are leading this rally to the upside. It's the narrowest since the 1990s, and we'll talk about that later on the breadth chart, but definitely something to be concerned about. These stocks have already added $1.4 trillion in market cap just this year, and 6 companies were responsible for 53% of the S&P gains. So clearly there's a little bit of hype around AI, and it's driving the markets higher, despite a lot of the negative economic data that we're seeing. And then they mentioned the things we've talked about here before. Microsoft is in the lead, Alphabet kind of just behind them, Meta also reporting some decent results. And really what it's allowing them to do is target ads at a more efficient rate, which is allowing them to be a little bit more profitable and also be leaner at the same time. As an example here, they talk about how Microsoft increased their productivity by 55% using AI tools, specifically for coding language. And like I said before, this is going to allow them to lean out and be more profitable. Meta is also laying off its workforce, talking about how AI is allowing them to be more profitable, and they have not ruled out more cuts. Despite all the hype and high valuations around these stocks, they still say here not to sell and that we will still get a recession and inflation will keep coming down. But once we get the interest rate pause and cuts later next year, it's going to allow stock prices today to seem more reasonable. I'm not sure how I feel about that yet. I still think there's probably one more downturn in the markets yet to come. But of course, we have to be patient. We have to trade the markets that we have. We'll talk about that more once we get to the charts. And to finish out here, they do talk about potentially going overseas to Europe or Japan, where stocks are much cheaper relative to US pricing. But really, the bottom line about AI is that it's allowing these big companies to be more efficient with their capital and be more productive with less people, allowing them to increase profits. Moving over to First Republic, we talked about this a little bit yesterday. The FDIC is asking for bids from JP Morgan and PNC Bank. And really the main takeaway from this article is that the FDIC is preparing for First Republic to go under receivership imminently. And from everything I've seen, the bidding is supposed to conclude today, April 30th. And if they don't get a good bid, then the bank will go under receivership, similar to what happened to SVB. And lastly, for news here, let's talk about the Fed and inflation. We know that the Fed and the markets currently disagree on what's going to happen with rates. The Fed says they're not cutting before the end of the year or early next year, but the markets are already pricing in some cuts towards the end of this year, somewhere around September or October. We'll take a look at the Fed futures after this, but that's really what they're highlighting in the first section here. Currently, the terminal rate is expected to be 5 to 5.25, which is where we will be after we get that 25 basis points next week. And then the markets are definitely expecting a pause at that level. Then they go into some of the effects of the Fed rate hikes, which resulted in the failure of Silicon Valley Bank and soon to be First Republic Bank. And then they finish up here with mentioning that the employment cost index went up by 4.8% on an annualized rate for the first 3 months of 2022. That's probably a typo. It's probably supposed to be 2023. And that the Fed is looking for a rate of 3.5% for ECI, which would be more consistent with the 2% inflation target. And the bottom line is that the FOMC faces an economy that continues to grow despite localized problems really concentrated in the regional banking sector. With that being said, let's take a look at Fed futures. You can see the FOMC decision is just 3 days and 20 hours away, still extremely likely to get 25 basis points and get to that terminal rate that we talked about, 5 to 5.25. June still showing that pause, almost 65% chance. July, same thesis, almost 60% chance of a pause at that level. September is where it starts to get a little bit questionable. It's just about split the two highest percentages. Say we're going to stay at the pause or potentially get that one cut. You can see the highest percentage is one cut here in September. That has decreased a little bit from previous probabilities, but it's still up from last week. And then November is where it really solidifies. So the highest probability is that we're going to get a cut. And then the next highest percentage is actually a second cut in November. So either way, we'll probably get one cut between September and November based on these probabilities, which of course can shift, but that's what the market is pricing in. And then looking at December, we're expecting at least one cut between November and December. So if we get a cut in November, then you would expect a pause in December. So overall, we're expecting 2 rate cuts before the end of the year based on current probabilities. Moving over to the economic calendar for next week, you can see on Monday we have ISM manufacturing, definitely interesting, still expected to be a decrease, but slightly higher than the previous numbers. Tuesday we got the JOLTS report. That'll definitely be interesting, and remember that comes out during market open. Same with ISM manufacturing at 10 o'clock Eastern. And then moving on to Wednesday. Wednesday is the big day, so we have ADP non-farms in the morning at 8:15, ISM non-manufacturing at 10 o'clock. And then in the afternoon, 1400 Eastern, we have the FOMC statement to include the Fed interest rate decision and press conference in the afternoon. You can see expectations is the move up to 5.25%. Moving over to Thursday, we obviously have jobless claims, non-farm productivity, Fed balance sheet. That'll be interesting. And then finishing up on Friday, we have non-farm payrolls. The unemployment rate expected to tick up slightly from 3.5% to 3.6%. And that'll wrap up all the important economic data for the week. Moving over to economic calendar, there's basically nothing here on Monday. There are a ton of companies, but nothing major. Looking at Tuesday, however, there are quite a few. Pfizer, HSBC, AMD, Starbucks, BP, Uber also on Tuesday. Marathon Petroleum, always interesting. Ford Motor, Simon Property Group. Moving over to Wednesday, we have Qualcomm, Airbus, CVS, Estee Lauder, Kraft Heinz, and some of my favorites here, Realty Income Corp and Yum Brands, as well as Barrick Gold. It's one of Berkshire Hathaway's holding, and Warren Buffett likes that company quite a bit. Moving over to Thursday, again, not a whole lot of companies on Thursday, but we got the heavy hitter here, Apple, after hours. That's going to be huge. Shell, fairly interesting. Anheuser-Busch, they've been in the news here recently. Booking.com, shocking how big that company is to me anyway. Shopify, always interesting. Moderna here. Ferrari, if you care about cars, definitely interesting. But again, the heavy hitter is Apple here on Thursday. And then looking at Friday here, not a whole lot of anything. We have Warner Brothers Discovery, fairly interesting. Adidas, we'll see how they're doing without Kanye. And that's really it to wrap up the week here for earnings. Moving over to the charts here, starting with the S&P 500 here on the weekly chart, you can see we ended up with a very strong close. We closed right at the highs. We're right at this trend line. Definitely interesting. We'll see if we can break up higher and hit this longer term trend line sitting up at about 4240 or so. Definitely an interesting level. That would be a 3 drives to a high type push. So we have first push, second push, third push. And that would likely cap off this run, and then we would see a bigger pullback, and that would continue this channel here. Looking at the MACD as well as volume here, still bullish on the MACD, volume's ticking up, RSI still ticking up. Overall, the SPY is still showing bullishness. It's also worth noting where that wick came down to. We hit the 144 week moving average as well as this trend line. We hit that 144 EMA right on the mark and then bounced from that level. And then, like I said, we're at resistance once again. Moving over to the daily chart here, you can see those 2 strong days to close out the week. We're right at the highs, looking back to 18 April. We take out that level, we have that next resistance sitting at about 4,200. And then, like we talked about, that 4,240 level on the weekly chart to the upside. Daily momentum moving back towards bullish. RSI crossed over the SMA. You would expect that to get into overbought conditions, in my opinion. Overall, still bullish. Doesn't mean we can't get a down day like we did here, where we had 2 bullish days, down day, then somewhat of a continuation here. So anything is possible, as always, but right now everything is pointing to another bullish day on Monday. Moving over to the NASDAQ here, you can see we also finished very strong, looking to get up to around 13,400 or so. We're right at the lows, looking back to March of 22. And if we break this low, the next level that we have to look to is actually the high from August of 22, which would be around 13,725 or so if you include those wicks, which would be a pretty decent up move from there. Overall, still very bullish. It is kind of a rising wedge. These highs are getting a little bit lower each time. So if we hit this wedge, maybe overthrow it, take out these wicks, that would be interesting going back to August. And then we get the bigger pullback down to the 200 SMA or something like that on the weekly chart. That would be super interesting. But again, overall, you have to trade what you have, which is still a very bullish week. And I would expect that to continue into next week. Again, certainly doesn't have to. It is worth noting that the week looks very similar to the week at the end of March, which looked very bullish as well. Big wick to the downside, closed at the highs, and then we ended up going sideways for 3 weeks. And we do have to think about timing here. So if we have the FOMC on Wednesday, we rally into Wednesday, take out these highs on the FOMC announcement, and then we get the bigger pullback. That seems like a very likely scenario. Moving over to the Russell here on the weekly, you can see we touched that trend line one more time and got a strong bounce from that level, sitting at 1730 or so, but we didn't quite reverse all the way, right? So we got this hanging man, which is generally bearish. So if we do get the continuation through this level, that would be super bearish. This level has held several times at this point. So overall, I am neutral right now on this weekly chart. RSI, somewhat negative, momentum, fairly neutral, ticking towards bullish. Again, so mixed signals here. Next level to the upside would actually be the lows from this consolidation in mid-November, sitting at 1822. And I did highlight this level because it sits right at the 55-week moving average as well as the 21-week moving average. And it wouldn't shock me if we got a rally up into this zone with the FOMC announcement, and then we get the bigger rejection if we are going to move lower. Moving over to the daily chart, this kind of reinforces my neutral bias. You can see we've been sideways for about a month and a half here, and it continues to stay that way. We dipped, hit that level, bounced. We're right in the middle of the range again. Maybe we come back, retest the upper range, which would be around 1800, 1810. Then we go up to 1822, which was that level we talked about, right at the 144 EMA and 55 EMAs here on the daily chart as well, plus the 200 SMA. So a ton of confluence here at this level. Certainly would make sense we would come up and wick that at some point next week, and then maybe we get a more clearly defined direction. Moving over to the Dow, on the weekly chart, you can see we're right at resistance. Once again, this has been a very long-term downtrend line. We are right there, and we'll see what happens going into the next week. If this breaks out, there's quite a bit of upside. Maybe we push up to around 345. That would be about 1.5% higher to get to these highs from the end of November. In terms of major trend lines on the weekly chart, there's actually quite a lot of room if we can hold above this level, all the way up to around 366 or so. That would definitely be interesting over the next few months. But looking shorter term here, you can see this consolidation going back to March of 22, sitting around that 350, 351 level. That would be what I would look for right after this 345, 346 level. Looking at momentum and RSI, both bullish, and pretty much everything in the short term is looking slightly bullish. Moving over to the daily chart, same thesis here, still looks bullish, but I do want to highlight this shorter term trend line. Marked the lows here right at the beginning of March before we had that really strong bounce and then pullback. You can see we interacted with that trend line again on the way through. And this really marked the lows going back to October of last year. Hit that level again, got a strong rejection before we pushed through it. Multiple wicks in this zone. And if we come back up here to that 341.65 level, that would be interesting. Obviously, if we break that level and go higher, that's going to be bullish. But if we come into this zone, find rejection, and start to break down below these 3 major trend lines, pretty much all at the same point here at 393, that would be pretty bearish. Momentum ticking towards the bullish direction. RSI actually looks pretty bullish as well. We came down, hit that 50 level, and then reacted very strongly up to the SMA, and we did cross it just slightly here. So overall, still looks bullish in the short term. And the fact that we did not interact with this lower trend on this wedge does tell me that there's probably a bit of strength going into the next week as well. Moving over to the S&P 500 compared to the equal-weighted S&P 500. Again, highlighting the fact that the equal-weighted S&P is still very low in comparison. SPY is very close to its highs from February, looking at potentially taking out those highs. But looking at the February highs here on RSP, you can see they're all the way up at around 153, 154, and current price on RSP is about 145. So this looks much more like a triangle. Certainly could break to the upside. It's not impossible. We're still below this resistance here, and if this holds and starts to break down, the question then becomes, can those FANG stocks continue to prop up the markets? We still have to trade the market that we're given, and this last week actually is fairly bullish. You can see a huge wick to the downside, closed very close to the high, and this could certainly break out here on equal-weighted S&Ps, and if this does start to move higher, that would mean more stocks are participating in the rally, and that would encourage me to get a little bit more bullish going into the next week. Moving over to the ratios, starting with the NASDAQ divided by the SPY and SPY divided by the Dow. You can see NASDAQ outperforming here. I would expect this to come up and retest this previous high at around 3.23. Certainly could go up to 3.31. That would be interesting, but this is the level I'm looking at. We also have the 144 EMA sitting up here at 324. Overall, expecting NASDAQ outperformance in the next week. Moving to the SPY divided by Dow. Looks like the SPY is looking to outperform, but honestly, the Dow is keeping up quite a bit. Momentum not moving in the bullish direction. Same here with the previous one, but RSI looks better on the NASDAQ versus SPY. Dow and the S&Ps are kind of flat here on the RSI. So this might consolidate. That would be interesting. Dow and SPY going flat, indicating that the NASDAQ is probably going to be the strongest, and the Russell is probably going to be the weakest. Moving over to the SPY divided by the M2 money supply. Just for a reminder, the M2 money supply has been declining, so that's going to improve this ratio. If the SPY goes up and M2 is going down, that means this is going to climb. But obviously, it's also dependent on the SPY pricing. You can see we're actually very close to the August highs on this chart. August high on this chart is sitting at 20.03. We're currently at 19.97. If we hit that level, that would be interesting. We're also above the level that I marked out here, which is fairly important going back to February as well as March and April from last year. So we're above this level of resistance, looking to take out that August wick. I would assume that's going to happen on the FOMC meeting, but also it's certainly possible that we come up and test this next level up at 2050. That would be the lows from this double top type pattern that we had prior to the drop in January of last year. So a very key level here. If we get a huge push, that would be pretty dramatic. Take out that August high, take out this level, and then we get the bigger pullback. That would also overshoot this rising triangle that I'm watching. Overshoot that upside, come back through, and then that would be quite bearish. Overall, momentum's still bullish, and you have to trade what you have. RSI is definitely bullish. I do want to highlight the level that we're at. So this 1992 level is the highs going back to February of 18. Multiple interactions here in April of 19 as well as September of 19. So equal levels here. We could absolutely stay and consolidate in this area for years. Doesn't necessarily have to break out and come back down into a huge breakdown. We could certainly come up here, move back into this more normalized range and chop sideways, just like we did from December of 2017 all the way until October of 2019. Obviously excluding the large move down that we had here in December of 18. Moving over to Apple and Tesla on the weekly chart here, you can see Apple had another very bullish week, getting close to overbought conditions, watching that. We're at 65.23, looking for that 70 level. It's certainly possible we get there this week with the FOMC. You can see the vicinity that we're in. So this is the August run-up where we came all the way up to 176.15 was the high of that wick. I do have a level here, it's 170.90, so looking to see what happens there. If we break that, then 176.15 is my next upper level. You can see how much volume was done at current price here at 164.90, 165, right in this zone. Tons of volume done in that area recently. If you zoom out a little bit, the area of highest volume moves down to about 149, which is interesting. But otherwise, still decent support right at this level. You can see we interacted with it multiple times. Area of highest volume looking up to those levels. Moving over to Tesla, this still looks like a high, lower high setup. Looking for that ultimate breakdown. This just looks like an initial wick in my opinion, and that this is going to continue lower. Momentum still looking very weak. RSI very weak. Very different pictures here on Apple and Tesla. Moving over to Microsoft and Etsy. Microsoft moving much higher, looking at 315 for my next high. That's the high going back to April of 2022. We've already taken out the August high. Very bullish, obviously. Almost overbought conditions, but you assume it's going to continue until it stops. And Microsoft has shown that it can have big weeks, just like it did on the week of 13 March. Where it rallied from about 246 all the way up to 281 or so. So this could certainly continue higher here. Etsy, I just want to highlight, I've been talking about this one for a while. It's in this falling wedge and it held the $100.50 at the end of the week. It ended up getting back above that level. This is starting to drift out of this wedge. And if we start to see a rally from this level, I think there's quite a bit of upside, maybe 10 to 12% of upside in the short term. So I'll be keeping an eye on this one going forward. Moving over to Amazon and Meta, you can see Amazon continues to move in this channel. It actually looks like a fairly healthy channel. We wicked the 55-week moving average and that upper trend line and then moved back down into this range, wicked that, and then moved back into the middle of the range, just below my 105.60 level. If we get above that, maybe we start to see another push higher, but this is still a bullish trend and you should trade it that way. So watching 105.60, if we can hold above that level, then I'm looking up at about 113 for my next upper resistance. If we can get through that 55 EMA. Momentum still bullish, but it did step down slightly. Lots of volume on the week, and it was a bearish week, which is interesting. Moving over to Meta, we had this huge down move, got all the way down to $90, which was ridiculous. And since then, we've more than doubled. And now we're back at the 155 EMA, very close to it on the weekly chart, looking at 245.49 for that level. So another $5 or so upside before we hit that. When you're this close, you would expect that we'll probably get there at least with a wick, especially with the FOMC coming up. RSI on the weekly chart definitely overbought. It's not super often that you get overbought conditions on the weekly chart. And the last time that we did get overbought conditions, that was right at the highs here before we started to have that bigger sell-off, which ended up leading into this huge down move to follow. So do overbought conditions, but still very bullish, looking at that 144 EMA. Moving over to communications and tech, you can see communications is still down quite a bit from its peaks, sitting just below this 60-30 level. Looking for that to break, retest the 200 SMA at 61.77. Above that, I have 64 as my next level. Momentum bullish, RSI bullish. Everything on communications looks pretty good here. Tech right at key resistance, right at the August high. Looking for that level to break. 101.86 is that level. We got about $1 to go before we hit that. And then if that breaks, I'm watching 160.16 to the upside. Overall, momentum and RSI still very bullish here on tech. Moving over to staples versus discretionary, you can see staples has been rallying. We hit my target here at 77.50 and then pulled back slightly from that level. If we take out this level, we might be looking at all-time highs here pretty soon. Looking at 79.90 as your next level, right at the wicks before that highest wick. Momentum still bullish, RSI still bullish. Discretionary, on the other hand, definitely not nearly as strong. Still in this kind of wedging pattern. We're slightly above it, but realistically, we're still here, continuing sideways. Neutral on my bias. We're in my supply zone. We're at the 55-week moving average. If we get above the 55-week average, then we have the 200 SMA just above that, sitting at 151.52. And then above that, I have a 153.90 level that I'll be watching. So a couple of levels to the upside, really still neutral here on discretionary. Moving over to transports here on the weekly chart, you can see we were going to close very weak, and then we had a very bullish push on the last 2 days along with the rest of the markets. We ended up holding the 200 SMA here at 219.92. But really, this is still a pretty bearish candle, and I would expect this to kind of follow through at least a little bit. We did hit some major support, so it's certainly possible that we get a little bit of a rally into next week. RSI definitely showing weakness, and momentum did step down into bearish. So if we get a little bit of follow through on this move, that would be bearish as well. A little bit tougher to say, but if I had to pick, I would say bearish here on transports. Moving over to the daily chart on transports, I just want to highlight we are below all the EMAs and SMAs. We came back and retested that 144 EMA after we had those 2 days of bullish price action. But overall, I would still expect this to continue to roll to the downside, in my opinion. Moving over to semiconductors on the daily and the weekly, you can see we had that same 2-day rally, retesting that neckline very close to, retesting the 9 EMA here on the daily chart, waiting to see if we get a rejection at 248.10. If we do, this is going to be going much lower, down to 226, and retesting the 144 EMA and 200 SMA on the daily chart. Looking at that weekly chart, you can see it was slightly bearish, but a huge wick to the downside. So definitely some buyers coming in this previous consolidation. But really, I'm still watching this head and shoulders. And now that this is broken down, it really does look like a retest on the daily chart. Momentum on the weekly chart, very weak. Looking for this to step into bearish territory next week or potentially the week after. RSI showing weakness as well. You can see the volume here also quite bearish. So overall, still bearish on semiconductors for next week. Moving over to stocks above their 50 and 200-day averages, you can see we have steady downtrend here on the 50-day average. We're right at that level. If we push above this level, my next level above that is 77.46. That would be the same level as the highs from January. Certainly possible we get to that level. That would break this downtrend line, and then we might actually see some more bearishness going into the FOMC meeting. That would be interesting. Looking at the 200-day chart, you can see we kind of have this channel starting to set up. Does kind of look like a really slanted neckline on a head and shoulders type pattern. Very interesting. We had that initial breakdown from this level, and it did look quite bearish, and I thought that it would have more follow through here. But we ended up getting a very strong wick into the end of the week. And now we're waiting to see if we get the follow through on that move. And if it takes out this level, it's going to be a significantly more bearish move. So right now we're in a little bit of a holding pattern until we either see this trend line break or we see the follow through to the downside. Moving over to the dollar here, the weekly chart does not show us a whole lot of anything. Pretty much the same stuff that we've been looking at here on the 4-hour chart, slowly ascending, breaking this level, looking to rally into the FOMC meeting. Momentum stepping towards bullish on the weekly. That's kind of interesting. RSI on the 4-hour still showing strength. Overall, still waiting to see this break higher on the dollar. Moving over to TLT and JNK here on the weekly charts, you can see they're actually quite similar. JNK showing a little bit more strength actually into the close on the week. Closing pretty close to the top of this consolidation area. Been sideways here for 4 weeks. Still looking at the 55 EMA just above where we are now at 92.75. Similar thesis here on TLT, looking at 107.44 to the upside, and then the 55 EMA here at 108.21. Momentum basically neutral, slightly stronger here on JNK. RSI on both slightly bullish. Moving over to the VIX to finish up the charts here on the weekly, you can see we had another very bearish week, and everything says we're going to go lower here next week. I would expect to hit this lower trend line at 1540. Obviously very close to that level, certainly likely to hit there. Last time we hit it, we did get a wick and a pretty decent follow through to the upside over the next couple of weeks. So watching this level pretty closely, then we'll see what kind of reaction we get. If we zoom out for some more horizontal support, you can see the lows here from June of 21 all the way through October of 21 was down around 1490, which is just below that major trend line. If we wicked that level, that would be very interesting. So overthrow the trend line, get a wick into this zone, and then maybe we get a little bit of a bounce, so a little bit more downside. And then you could expect to see that bounce coming off of the FOMC meeting, in my opinion. Moving over to my accounts, obviously none of my positions have changed since the Friday video. I'm definitely leaning towards bullish to start Monday and Tuesday. See how that plays out. I might have to play a little bit of defense on this 324 call. Markets were up a little bit after hours. You can see they were at 322.70 to 322.83. So about 20 cents higher after hours. Still have a little bit of room to 324, but we'll see how it plays out. Overall, still bullish. And based on timing at this point, it does seem like we'll probably rally into the FOMC meeting, and then we'll get that bigger pullback. We've seen the FOMC be the catalyst to mark tops before. We're getting a big rally into the FOMC, and it does seem like that pattern is going to repeat where we get a big wick high on the FOMC news, markets lock in that probability, and then we get some comments during the Q&A portion, and then we could see a bigger pullback. So remember, Wednesday's the big day for FOMC. And it might be worth it to just take off your positions for Wednesday and re-enter for either better prices or once all of the volatility has kind of taken place following the FOMC minutes and the Q&A portion. Let me know what you think of AI or the First Republic situation or any of the charts going into this week. Definitely like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Definitely check out the Patreon and the Twitter. And of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.